Good morning, this is Larry Edelson with my Uncommon Wisdom video for Thursday, October 15th. We've got a lot happening, so let me get right to it. Gold in particular, I want to focus on gold. As you probably already know, gold has moved to an all-time record high, up to the 1,070 level on the cash gold contract, slightly higher in the futures contract. This is a new record high intraday and a new closing high. You can see the chart right here. This is today's action. Chances are we will see gold pull back to the moving average here and into the support area at 1,031 over the next couple of days. But that pullback should be quick and it should be over in a very short period of time. I am now a buyer in gold, getting ready for the next leg up in the precious metal, which should see first 1,100, then 1,250, 1,300, and then $1,500. Once gold broke above its previous 2008 high of $1,035 and especially above the 1,050 level, that confirmed on my systems that gold's next big leg up is now underway. That doesn't mean there won't be pullbacks. There will be pullbacks, but we now have high probability confirmation that gold is beginning its next leg up and will reach much higher prices. The first target would be an extreme of 1,500. If we reach that, and I can't tell you exactly when, but once we reach the $1,500 level, I would then look for a fairly sizable correction and then another longer term leg up in gold again to over 2,300, possibly as high as $5,000 an ounce. I've kept you abreast in my Real Wealth Flash alerts, and I'm keeping you abreast in this video update. But just to be to repeat myself, the next leg up in gold has now officially started, and we will be buying pullbacks here. And indeed, I actually have I sent out a flash alert on Wednesday to my subscribers telling them exactly what to do. The main force behind the rise in gold is not inflation, although you're hearing a lot about that talk, and no doubt we will see inflation down the road. But what's really driving gold now is the weakness in the US dollar and the uncertainty surrounding the dollar. I've been showing you the dollar index chart over the last several weeks. Here it is again. You can see that it's still below this trend channel here and this shelf of support. However, it hasn't gone into free fall yet. There's a support line here that it's sitting on, and that's holding it from completely collapsing. Once we do see a move below this line here, the dollar's in a lot of trouble. We will see it. We will see the dollar move below this line. The question is, will it happen now, or will it happen a few days from now, or a couple of weeks right now? Many indicators I have tell me the dollar's due for a bounce. It's short-term oversold, and we will probably see that occur with a mild, very small correction in gold. But as you can see, this is a pretty ugly chart. The dollar downtrend is still very much in force, even if it rallies up to the 77 area on the index or even the 78 area on the index. The decline in the dollar is wicked. And over the last few weeks, we've seen the fundamentals follow my forecast. The dollar is in the process of being replaced over the next couple of years as the world's reserve currency. There's no doubt about that in my mind. And there's also no doubt in my mind whatsoever that Washington is fully aware of what's happening here and behind the scenes probably encouraging it. Sad to say, but Washington, the only way out for Washington and the massive debts that it has is to devalue the dollar. If you think about it, I mean, if you devalue the dollar to 1/10 of what it is today, over the next few years, and you have $125 trillion in debts, all of a sudden you've paid back those debts with what amounts to currency worth $12.5 trillion. So you can reduce the debt load dramatically by devaluing a currency, and we've seen this repeatedly throughout history, from the Roman times to the Byzantium times, to Great Britain, to a host of third world countries. Again, unfortunately, it is now happening to the United States. And this is a first world debt crisis primarily focused on the United States. A few other things. We've seen oil rip-roaring to the upside, pretty much like I expected it to follow gold. Here's a quick chart of oil, the December futures contract. Oil is now up to $75. We have a triple top formation here, which might be a little bit short-term bearish, but triple tops, despite what you read and hear about, are not a bearish indication. Quite to the contrary, they're a very bullish indication. They are only bearish in the short term. The market gets a little tired up here. It sees resistance from two prior tops. So a lot of short-term traders and investors take profits in this area. On the fourth time through, you'll see oil eat away at that resistance and springboard higher towards $100 and possibly even higher over the next few months. Other commodities are also rallying. We're seeing good rallies in wheat, corn, and soybeans, and a host of commodities. This is a natural resource play for two reasons. One, as a hedge against the declining dollar, and two, because demand for natural resources, despite the financial crisis over the last couple of years, remains pretty much at record highs and is going to head even higher as China, India, and the rest of Asia continue to grow at galloping speeds. This is Larry. If you're a Real Wealth subscriber, I hope you acted on my flash alert yesterday containing some recommendations. If you're not a subscriber, certainly feel free to call customer service and join up to get more of my short and long-term specific recommendations. Till next week, this is Larry.